Now we get to transition trades. And transition trades are a little bit more challenging than the other trades. There's a bit more discretion. And one of the reasons why I think that they're a little bit more challenging is because of the amount of time that's associated with this particular time window. It's the largest time window. It's actually a 2-hour time window when you're looking for transition trade. So it goes from 7:30 all the way out to 9:25. That's quite a few bars that build out relative to the other setups that we have. When you have a compressed time frame in your setup, you really have a limited number of levels that you're looking at that could be possible levels for you. And so because we're extending out this amount of time, it makes the level selection a little bit more challenging for us. And so that's one reason why transition trades can be a little bit more challenging, and there's a little bit more discretion associated with it. We have some other tools available for transition traders that give us better levels, more defined levels. We have monthly levels, we have weekly levels, we have this level, which is a gap level. And these help to orient us around things that might be key for turning points for transition trades. We're also going to be looking at transition data, and we're going to be answering the question, where is price going to go? Think of a transition trade very similar to a DR formation trade. It's just happening earlier. DR formation trades happen at the end, basically at the end of the transition period and the beginning of the DR formation period, because a lot of things could happen in that transition period. But we're looking at the data much the same way. It's just that the data can change on us because we could have a change in condition that happens within this broad time period. So transition trades are pretty straightforward, but there is some discretion involved with them. Here's an example from gold, and this 7:30, I do want to add to this, the 7:30 Eastern time period is really relevant for gold. CL tends to be a little bit later, and some of the others tend to be a little bit later when they start to move in the transition period. But gold a lot of times will turn right at 7:30 or close to 7:30. So this is one of those trades where I need to be ready to trade by 7:30 Eastern time. I could potentially miss trades, really big trades. That's the other thing about transition trades. They can be the biggest trades because you're getting in at a place where that's the turning point for the day for where price is going to go the rest of the day. So in this example, transition trades, we have 7:30 to 9:25 is our time period. And now we want to look at our transition data. At this point, we want to know, and usually this is happening for me before, so I'm actually in my seat beforehand, and usually around 7:10, 7:15, I'm looking at my data, and I want to know the same question I had with that DR formation trade, which is, are we going to form a pattern that looks like this, or that looks like this? What's the highest probability, the highest likelihood pattern that we're going to form based on where I'm at currently? And again, that could change, but at this stage at 7:30 in the morning, what is the most likely, the highest probability? Okay. So when I go into my application and I put in all the things that I need to take a look and filter and try to get the right parameters for this given day, what comes out? Well, for this particular day, for everything that's happened here in the ADR session and here over here, this is what my probability looks like for what pattern is going to form. I have a 67% probability that we're going to form above this range right here. 67% is absolutely a strong probability here. So we definitely want to make sure that we find a spot where we can put risk on and take a shot for this particular transition trade. Again, using our 2-minute entry, looking at levels, I'm looking for, ideally this level to hold, or maybe we sweep it and then we kind of come back, right? We call this a sweep and a reclaim that happens. Let me just kind of zoom in here. So what I'm looking for is I'm looking for price to either turn here, to turn somewhere around here, this zone. So maybe it comes down and sweeps up right? And then takes off, that'd be great. If it comes down to here, this zone right down here, then I'm questioning whether this is going to happen or not. I'm a little bit concerned about this happening, and I'd probably want to hold off a little bit, right? So I have certain rules and certain conditions that I do look for. It's not just to blindly take a trade like this. So this is 7:30, so right on the dot. And we come down here, that's our first move after 7:30, and then we start to turn up. Now, as I look at the 2-minute chart, if I looked at the 2-minute chart here, I'm probably, if I remember correctly, I think I had an entry let me just check my chart. There was one entry at around 2479-ish, probably 2479.5-ish. And then there was another entry at 2480, so a little bit above. So let's just call this 2480. So we take this right here, 2480, and we're right down here. And now what we're going to do is we're going to look at some of our levels. Okay, so I mentioned these advanced levels that we have. So, one level is our monthlies. So we're going to take a look at our monthly levels and see if there's anything around. So we have this right here. So this is 1 monthly levels. This is 5.6R. Right to the bottom of this is 7R. And if we go to the top of this level, that's 13R. So for now, what I would probably do is I'd probably just hang on tight, put my 13R on. I want to see how this would form. And of course, if I get, a significant move, maybe 2R, 3R, maybe wait till it moves above here, move to break even, right? So let's just see what happens here. So we get a nice move up. And then we actually kind of are able to get above these highs. So for sure, I'm at break even here at this point. And notice how there's just so much time happening now in this transition period, right? You're just kind of sitting and waiting. So now we have our DR formation. We immediately shoot up. We close into this area here. That's a good sign for me. So already I'm at 7R. So let's just say for fun, for this example, let's just hold it and see if we can get to 13R. So this will be fun. Let's just see what we got. We're going to hold it. We're going to hold it. We're going to hold it. And boom, we almost get all the way up to there. And boom, we finally make it. So there we go. 13R trade. Or maybe you got nervous and you took out somewhere around here. That's still a 10R trade. Not a problem with that one either. Right? So that's the anatomy of what a transition trade looks like. For gold, I'm looking right at 730. I'm looking for possible levels. I'm looking for on my 2-minute chart. And I'm also watching for conditions that change this dominant scenario right here. So if this dominant scenario changes, I want to make sure, if we go from like an upside X plus to what's called a range expansion here, I want to make sure I'm prepared for that as well. So those are the 5 data flow strategies. The box is the training strategy. Time and price is bread and butter. Pre-confirmation gets you into that advanced data, looking at the transition data a little bit more, has a really good risk-reward win-loss ratio profile to it. DR formation gets a little bit more complexity. Transition, the most complex of all. And you're reading context and you're recognizing you have a wider time frame. You have to make some decisions there. So 5 data flow strategies, a solid foundation for creating consistency.